give an overview of what's going to be possible in this panel. The underlying technology that supports crypto-backed assets is undeniably has monumental potential. The question is, how is that being actualized? What's possible? What's currently being done? What's the current and future speculations that can be helped to gain value in the current environment? And then what are the regulation hurdles? So on this panel, and I would say use it, writing questions because it's a really diverse panel of people to answer all these questions. We have someone who's dialing in from Switzerland who has CEO of a digital exchange. We have a lawyer / professor who can go over the regulation market. Then also have someone who actually actively speculates in arbitrage in the crypto market. So I'll let them introduce themselves real quick since we're in a crunch for time, but we'll jump into questions after that. So Mauro, did you want to kick it off with your introduction?
Sure. Thank you very much for the invite. My name is Mauro Andriotto. I'm a lecturer in corporate finance in Italy and Switzerland. I'm an expert advisor of the Swiss Federal Agency for Investments. As you said, I'm based here in Switzerland, where I am also a board member of the Chamber of Commerce for Blockchain and Digital Finance. I'm part of a family office that is named SMC. We are in 15 countries around the world, from Russia to South America, China, Middle East, and many offices around Europe. And I am the CEO and founding partner of the European Digital Asset Exchange. Is one of the first exchange in Europe to be authorized to have a primary and a secondary market for security token that can be open to retail and institutional investor. We have already done almost 10 projects between the project completed and the project that are incoming soon. And I would be happy to tell you something about them later.
Awesome, thanks, Mauro. Dan, you want to go your intro?
Sure. Yeah, I'm Dan Marcus. As was alluded to, I'm an attorney, so I have my own practice where I primarily work with a lot of companies in the Web3 space. Among them, a bunch of big NFT projects, including Punk's Comics, which if you've heard of them, they raised about $100 million in the last year. Another big NFT project called Nuclear Nerds, which grossed several million in sales and is raising money. So if you want to talk to me about them later, I'm happy to talk to you about them. Got no skin in that game per se. And I'm also a professor at NYU, where I teach a number of courses, including a course about the business of competitive video games, which we talk about the Metaverse and the world of Web3. The original Metaverse was, of course, video games, and so the intersection and applicability of this sort of technology is pretty prime in that space. And that's all that's relevant for now. I'll kick you to the rest of it.
Yeah. Hi, I'm Zirker. I'm the CEO of Coinado. I started a company that did research and arbitrage in 2013 on digital currency exchanges. At the time, it was pretty small, between only about 3 exchanges, but it eventually grew to 6 or 7. And in 2013 to 2014, we were doing about 1% of the market transactions overall. Subsequently, from that, regulation came in, and a lot of our investor base got cut off from the global markets because they were in the United States, which we will talk about later. And we've reoriented ourselves to an analytics firm that does research for bespoke clients, as well as is looking at creating some analytics tools and engines for ourselves, as well as for possibly institutional clients.
Mm-hmm. Awesome. So I'm going to kind of jump in right where the FinTech panel before us left off, get into the meat of it, and get an understanding of where you guys are seeing the momentum, where you're seeing the trends and the opportunities. Obviously, crypto asset market has gone through a massive changes in the past few years. There's tons of increased volume and therefore opportunity, or decreasing of opportunity, sometimes in arbitrage examples. And here, I'll just pass it back to you. Where are you seeing kind of the general trends, and where are you seeing opportunities?
Yeah, so to start with the arbitrage example, I think the largest factor that has moved the markets from, and the market movement in transactions has been from spot to futures and derivatives, and pretty quickly in the last 2 to 3 years. That has been facilitated a lot by lack of clarity on regulation from the SEC, and the exchanges basically saying, we don't want to deal with compliance, so we're going to cut off the US market, which is a fairly large deal for the spot market because it's bifurcated it, and it's created opportunities for larger institutions that can navigate cross national accounts, as well as take those opportunities because they do still exist. But it has weakened the spot market overall because people are now pulling away from it, saying, okay, there's less trusted exchanges that I can work with because I'm now only looking at the United States, and I could get a better exposure with derivatives and have less capital sitting on the exchange and have less counterparty exposure. So that's the largest shift that I've seen in the markets of late. There are a couple other things that I can talk about in that category, but that's that.
Yeah, absolutely. I think, before I pass around that same question, one thing that you can nail down is really important, I think, is the involvement of the SEC. Back in 2018, the SEC leader ultimately said that Bitcoin seems like it's a currency. Anything that's like an ICO is a security, but it's to be determined exactly how the SEC plans on regulating and continue regulating, as you mentioned. So kind of quick intermediate question passed to you, Dan. How do you feel about the ongoing of that the Howey test, where we're at right now, and what kind of progress the SEC is making?
Yeah, I mean, the SEC has been pretty clear about what they consider pretty much all digital assets to be outside of true cryptocurrencies. I think, Aaron and I, we talked about this offline yesterday, and that Bitcoin is really the only true cryptocurrency, and that it isn't really reliant upon the efforts of others. And the anonymity of Bitcoin has lent itself to that. But the SEC has pretty much said in plain English that the vast majority, if not all, of these digital assets are considered to be securities, and thus are ultimately going to have to register, unless they can find an exemption. So, I tell every client that if you want to do this, you have to understand what the risks are, but chances are you're probably a security. And so where do we stand with regulation? There are so many of these projects, and there are so many of these companies that are either issuing tokens or creating NFTs or creating digital assets, such that there's way too many projects, and there is enforcement power at the various agencies, whether that is the SEC, whether that is the CFTC or the DOJ. We've seen legislation get kicked around Congress. I would hope that they have some sensibility to have a safe harbor that allows people to come into compliance, because most people are not in compliance at this point. And so it is a little bit of a glass half empty cynical view, but it is also a very practical one, and that most of these things are almost per se investment contracts. It's all about how Congress and the states are going to handle it, and which ones you're going to decide to crack down on.
There's probably a storm coming too, because the statute of limitations is about to run out on those 2018 ICOs.
Really? Wow.
And 2017 ICOs.
Yeah, and I'll give a plug to one guy who's not even here, but if you're on Twitter, you may know who he is. So a colleague of mine named Carlo D'Angelo is a very big Web3 lawyer on Twitter. He's a criminal defense lawyer. I think you'll appreciate this. His whole premise and thesis is that all of these projects in the Web3 world are ultimately going to be are either unregistered securities or, at worst, like large-scale, wide-scale fraud, and they're all going to need criminal defense lawyers at some point. And so when Armageddon comes, he's going to swoop everybody up. Very worthy follow on Twitter, by the way, from Carlo. But
Just don't
yeah.
pull a
So it's a matter of the way the project is structured, and
No.
that you cannot finance it that way?
No, not really, because when you think about like what if you think about what the test is very broad, and the SEC's even articulated. Like if you look up SEC 2019 guidance on digital assets, they will tell you in very plain English. Here's a long list of factors we consider. We consider that most of the factors of the quote unquote Howey test are met, which is basically, do you have an investment of money? That's not even a question, right? There's always an investment of money, whether that's actual cash or some other form of value. Not really a concern. Is there a common enterprise? I.e., is your money pooled together? Are you guys rising and falling together? We don't need to get into horizontal and vertical commonality. That's a very, very technical legal thing. That's not important. But the answer to that question and factor is normally yes. And then the third one, does it rely on others? We hear a lot of talk about like, oh, decentralized this and that is great. How decentralized is it really, right? The thing that I thought thing that occurred to me today is that, we've just shifted the specialty as far as who you need to consult with respect to some of these smart contracts from lawyers to programmers, right? Because whereas like everybody knows how to read English, I'm not sure everybody's conversant in Solidity, for example. And so you're really at the whim of whoever developed that contract, who's the watchdog and who's the check and balance on the smart contract. So I took your question in a long circuitous way to say that you can structure your project, you can try, but if you ask the SEC, they'll tell you it's probably an investment contract, so either register or find an exemption.
So the phrase used yesterday is that they expect the SEC to do regulation by enforcement.
Yeah.
They already are.
Like they continue and step it up, they were saying.
So I think, Bits the question, what advice would you give to somebody who wants to invest in a crypto asset that isn't about to get pursued by the DOJ?
That's normally something I ask, usually people pay me for, but you guys seem like a good group, so I'll give it to you for free. I would try to find, I deal with a lot of NFT projects specifically. I'd try to find a different motivation for why people are getting involved with your project, right? So a big part of the Howey test is an expectation of profit or a return. And if you could, and this might fall on deaf ears, or this may not be an effective strategy, but it is yet to be tested, right? If you, for instance, are creating a game, which is something that I know very well, and the Web3 play to earn game, you would argue that the reason that you're buying into the game is to improve your experience in the game, not because you're buying it in hopes that, speculatively, whatever it is that you're investing in, the skin, the currency, et cetera, is going to increase in value. So generally speaking, that's where we end up with a lot of these projects and companies, is that if you could figure out another pretense or another motivation for why people would be investing value or money into whatever project it is, I think you're probably on the better side of that very gray line, but you're never 100%, in the black or the white here.
Makes sense.
On that point, I think it's interesting that some of these projects are being used as stores of value, and on their networks also transacting with their own tokens as stores of value, while we also have Bitcoin and all these other digital assets that are true collateral and don't have these things built in. So when you see a system building in, a fairly prominent token that they want circulated, and the use case is kind of small for it, you can really start to see that some of the aspects that we were just talking about are present.
Awesome. And continuing with the original question, Mauro, I'd like to pass it over to you. Thinking about trends, opportunities that you're seeing on your end, I'd love to hear an overview.
Yeah, well, I've recently joined the Chamber for Digital Finance and Blockchain, together with the former president of the Swiss Senate. And the Chamber is aiming at representing interest of digital and blockchain industry in Switzerland and in other countries. And we have the mission of promoting the acceptance of the technology and to help the infrastructure to evolve. And right now we are working with the Lugano municipality that has recently launched one of the most interesting project and program at the national level for blockchain and crypto project that is called Plan B. Lugano Plans B initiative is an initiative between the city of Lugano and Tether and Polygon to scale blockchain and Bitcoin technology around Switzerland, and in particular with a specific reference to the Lugano city, to positively impact all the facets of the daily life with this new and disruptive technology, in particular small transaction with local merchants, annual taxes that can be paid with cryptocurrencies. Also, the Lugano cities has issued a cryptocurrency that is called LGVA. but also asset tokenization, public registry and data management, and so on. And this is a very huge opportunity for, I would say, investors, for companies, for startups, that is already attracting in Lugano a lot of interest and projects and stakeholders that are supporting this program. Together with a consortium of committed players, between which there is, as I said, also Tether, and the CTO of Tether is living here in Lugano right now. And Polygon, the city is setting up a 100 million fund pool for startups and for new blockchain projects and innovation. And the idea is also attracting companies, for example, from the Crypto Valley, to invite company to relocate here in Ticino and in Lugano. And other interesting initiative of the plan are, for example, grants for students in cooperation with the university that are based here in the south of Switzerland, a new blockchain hub that will be built in the center of the city for these projects, and a summer school that has been already launched this summer with many specific courses for blockchain and crypto project. The role of our chamber right now is to foster the international relationship of this plan and to find the stakeholders around the world that will be interested in joining and supporting the Lugano's plan B.
Yeah, it's pretty fascinating because it seems like you're almost a library of tangible use cases for cryptocurrency. We'd spoken earlier, you had mentioned that there's actually other kind of deals that you're currently working on. I'd love to hear a couple of examples, one example, a little bit more of a case study of that.
Yes, well, recently we have completed a very interesting project. As I said, we have a platform. I'm the founder of this platform, is the European Digital Asset Exchange. We have several competitors around Europe and in Switzerland, but no one that is able to offer and provide a secondary market for retail investors. We have been authorized and scrutinized by the regulator, so we are ready to start. The secondary market is not open yet, but it probably will be open by the end of 2022, beginning of 2023, and it will be open with our own token because our shares will be tokenized on our platform. One of the recent projects that we have completed is named HCS Pharma. It has been selected by the European Commission as one of the top 50 biotech company in Europe. It's a startup, but it's a startup that is planning to be listed on the Frankfurt Stock Exchange. So what we have done for the company is a pre-IPO on our platform with the possibility of buying the shares through the security token and to receive at the listing day the shares on the Frankfurt Stock Exchange with a 20% discount. The project has raised more than 22 millions, of which 20 millions in a private sale with a French anchor investor that is named GEM Group. It's an alternative investment based in Paris, and more than 2 millions with the sale of the security token. Right now, we have another very, very interesting project that is a contract that we have with the government of Antigua to issue the first sovereign bond on the blockchain. So we are working with the government of Antigua for issuing, probably it will be pretty small, it will be around 5 million issuing for financing the battery package of a solar project that they are building in Antigua. The bond will offer around a 6% interest per year and will be completely collateralized at the Global Bank of Commerce of Antigua with a deposit in dollar that will be done by the government. So I'm pretty proud about this project because as far as I know, there hasn't been other cases of government that are using the blockchain for issuing this type of instruments.
Super interesting. And I think obviously here that there's an overshadow of potential regulatory threat from the SEC on this end. You'd mentioned that biotech essentially going public, right, but through the coin offering. Are there any kind of regulatory looming threats that you have on your end in the European Union?
Yeah, well, as I said, I'm based in Switzerland, and the regulation in Switzerland is a little bit different from Europe. Cryptocurrencies in Switzerland are very well regulated. You have three main type of token. You have the utility token that it's similar to goods. You have a payment token that are cryptocurrency, and then you have asset-based token, and they are the security token. To be brief, in Europe, you have a new regulation that is coming up that is called MiCA. However, MiCA is not going to regulate the security tokens. MiCA will, let's say, regulate everything that is not a security, and will probably enter into force in around 18 months. For security token, we have another regulation in Europe that is called MiFID, where the definition of a financial instrument is much more complex than in US, because the European Supervisory Market Authority is defining every single asset class, so is giving a precise definition of what is a financial instrument, is a share, is a bond, is a derivative, and is defining every one of these asset classes. So there is no a test like in US that you can use to understand if you have a security or not. However, there should be in future a change in MiFID II in order to include also financial instruments that are going to be distributed through the decentralized ledger technology. However, it's already possible to do a compliant offering of security tokens in Europe. We have already done this in, I think it was 2018 or 2019, I don't remember exactly, with a company where I was an advisor. The name is BitBond. And BitBond was the first project in Europe to deposit a European prospectus that, if you want, is very similar to the US regulation. Deposited this European prospectus, then they, with the BaFin, that is the German regulator, then the European prospectus has been passported in Europe, and at that point your offer is a public offering that is compliant all over Europe in every country. So today is already possible to do it, and this is the regulation that will take place with MiFID II and MiCA.
We have a few minutes left.
Yeah.
So cool.
So
Questions.
I think it'd be great to jump back to kind of macro events. And I know, Aaron, you had mentioned that about 60% of crypto-backed assets are currently sitting at Bitcoin and Ethereum. What does that say for the greater market?
Yeah, so alongside of 60% of that is a gigantic supply of stable coins that are issued. It's at an all-time high right now. And the ratio between stable coins and cryptocurrency overall market cap is at pretty much all-time low. So what that means is that there's a lot of money sitting on the sideline waiting for opportunity or waiting out the macro. That being said, it's hard to differentiate whether or not that money is going to flow back into Bitcoin or into alternative assets. In the past, during large market cycles, Bitcoin has hugely increased during the way up in market dominance, and shrunk a lot larger than it has currently, and allowed a lot of that money to spread out and go into alternative currencies. And you might have heard the term altcoin season thrown around, at which a lot of people were expecting during this time period, but the entire macro has been down, so we've basically not seen that at all. So the question then becomes, are these truly sitting on the sideline? And that would indicate that there's a bad sentiment on price, as well as 1 year outlook or so, or is there just no attractive project that is so huge because of the perception of the current alternative currency market?
Is it altcoin season or hashtag altcoin season?
It's either one. I mean,
We're on in a few minutes.
What, if you want to have closing remarks, that'd be great.
Yeah, okay, I was gonna ask for questions to see if anybody.
Yeah, any questions?
I think it's a great opportunity. As you can see, people are quite knowledgeable on this panel. I know that typically with crypto assets, everybody's scared of asking a stupid question, but I say just feel free, go nuts.
We've asked lots in the past, so it's not a big deal.
Are you in favor with what Miami has going on with the Bitcoin and cryptocurrency? Are y'all behind that?
What is Miami doing?
They're pretty much pushing that they're going to be the capital of cryptocurrency.
Well, it's a better environment than New York, that's for sure, but they don't have a bit license requirement, you know?
I don't know. I have like the cynical take is I think their mayor has a higher political aspirations and he's doing what is good for his city. So like that I think is cyclical, right? Like we saw it during COVID, a lot of people leaving New York, leaving San Francisco, going to Miami because it's beautiful and no state income tax. Again, I'm not a Florida person, so this is not an advertisement for Miami. But you know, I think you got to read between the lines there. It has less to do with Bitcoin, more to do with what it does for Miami.
Well, Miami has no computer science school in the top 80 in the country. Well, as in New York, there's probably 10 within a 90-mile distance. The closest computer science school is University of Florida, which is 150 miles away.
No, but if all the firms move there, it doesn't matter, people will follow. I mean, I've moved there half time, even based on this, so.
Let's call it a difference of opinion. Because I'm from Miami, and I know that every national scholar like myself moved away from Miami when they could. So, but anyway, any other remarks?
Yeah, I like the adoption sentiment. I mean, New York came out basically a couple of years ago in the exact opposite way, which was pretty expected because New York is a leader in regulatory for most things. But it really crippled a lot of the companies that were working in New York, as well as trying to work out of New York and globally to the point where they moved. So if Florida can do it, then they'll probably move there.
Yeah, look, Fortress's headquarters has moved there. A16Z basically has moved. It's like not necessarily headquarters, but like a lot of the big institutional money that is flowing into the space. I mean, A16Z raised a $6 billion like, you know, Web3 focused fund. They're going to deploy that money somewhere, right? So I think there's going to be a lot of that ecosystem there.
Okay, closing remark, crypto assets is about 2 trillion. You know, and that basically happened overnight when you compare it to the overall centralized finance. And there's definitely clear values, tangible values that are being demonstrated, as Mauro's gone over quite extensively. So if you're interested in it, reach out to these guys, learn more.
Thanks so much.
Great job, guys.
Thank you very much.
One remark is that Francis Flores, that's the mayor, right?
Yeah.
Actually spoke at an event we had at Bolsonaro 3 years ago.